Welcome to this episode of the Masters of Finance podcast. Today, Chris and I are going to be going through Labor's tax policies for the upcoming federal election. We're going to have a look into some of the things that are probably more widely known around negative gearing and franking credits and the like, but also delve into some of the changes that are coming with super if Labor get into power that they seem to have passed under the radar a little bit. Anyway, hope you enjoy it. Have a listen.
Chris Haggett and Alex Hunt are authorised representatives of Moran Partners Financial Planning. Any opinions expressed in this podcast are solely our own and do not reflect the opinions or views of Moran Partners Financial Planning or any entity we are associated with. This podcast is for informational purposes only and should not be used for or does it constitute investment advice.
All right, welcome, Chris, to this episode of the Masters of Finance podcast. Big episode this one, Chris.
It is going to be a big one.
We're on camera for this one.
Yeah, we are. Hello, YouTube.
That's right. So here we go with the first of many video episodes of the podcast to come.
Gives people options. Also allows them to see us, I guess. A bit different.
That's right. Put the face to the voice.
Yes, exactly right.
So what's news, Chris? How are you?
Yeah, things are good. Busy, but yeah, just looking forward to, well, not really a week off. I'll be working next week, but the office is closing down for a week. But yeah, just a bit of downtime, I suppose.
Bit of an Easter break. The holiday at what still feels like the start of the year, really, doesn't it? But I would think we're a quarter of the way in.
I know, it's ridiculous. It just flies past. I said to Gnomes this morning, I was like, in 2 days, Eve will be 7 months old. It's like, where the hell has that time gone?
Yeah, it's funny like that. But I always feel like, it's flown. Time's flown, especially when you're looking at the kids. But also, I cannot remember really time before that. Yeah. It feels like an eternity.
Yeah, it does. Yeah, but it's good. But yeah, so we're April, almost Anzac Day.
Yeah, that's right. And very shortly, federal election, May the 18th, I believe.
Yep.
Is the date.
We're very close and we're in full news cycle. So, most of the headlines when wake up in the morning, either on radio or newspaper or wherever it happens to be, is Bill Shorten said this, Scott Morrison said this.
We started the political ad campaigns.
Yeah, we have, yeah.
I mean, Clive Palmer's been running his for years, for 12 months, it feels like.
I was watching TV last night and I was just like, oh, go away, Clive. That's a very Melbourne thing to say.
So politics aside, because this podcast is not a political podcast.
We are not, no.
Necessarily. We're really here to talk about what are the tax policies and the monetary policies that are really going to affect us and our clients particularly.
Yeah,
and what are the financial implications for picking a side in the upcoming federal election?
And coming into the podcast this morning, I was just sort of thinking, well, a lot of pretty much everything we're going to be discussing today is Labor's tax policies.
Well, that's right.
But that's primarily because the coalition, other than providing some tax cuts in the budget, isn't going to change anything. So their policies are really status quo.
That's true. I mean, we covered that last podcast too when we did the budget, which was essentially the upcoming election budget, right?
Yep,
this is that was the Liberal Party or the coalition's proposal as to re-elect us because these are all the tax cuts you'll get.
Yeah, exactly. But so this podcast really is going to be about Mr. Shorten and Labor's string of policies. Like, I can't remember in all my years of at least being in this industry of someone coming in with this many tax changes.
It's quite interesting, isn't it? Because we always said, we need reform, and then someone's actually come out with some tax reform, but not all of it's very palatable.
Yeah, no, not at all. Well, it depends on which side of the fence you're sitting on, but that's kind of what we're going to explore today.
True, but who are the winners out of it? We'll get into the details shortly, but who are the winners out of all of this? The only winners I can see is the government for collecting more revenue.
Well, that's what I was going to say. The budget is really the winner. Yeah.
And
everybody else is kind of...
I suppose there's some more money for Medicare and more money for bits and pieces like that. True. So there are some winners in that respect, but usually when you come out of a budget, there's always the winners and the losers. And I'm looking at Shorten's tax policies particularly, and I'm thinking there's not many winners in there.
No, everybody kind of cops it. But anyway, I'll expand on my views on that as we get into the podcast.
We want to put in a little disclaimer that we're not necessarily Labor or Liberal voters in this podcast.
I've never voted Liberal in my entire life. So I grew up in a working class household, so I've very much been Labor leaning my whole life.
So when you hear Chris bashing the Labor Party in this podcast, it's not because he's a Liberal voter and he reads the Herald Sun, although he might.
Well, I read the Herald Sun for the sport pages, because that's about it.
Yeah.
So no political tilt here. There's no, I guess, bias in that sense.
So let's get into it. Franking credits.
Okay, so we've covered this.
I think this is our fourth or fifth podcast we did on franking credits, because this was talked about, 12 months ago about this particular policy and how this might work.
Yep. So there's a podcast in the back catalogue called Bill and Frank. Ing.
Yeah.
Which you can go back and have a listen to. But
so basically with this one, what we're going to see is anyone who doesn't pay any tax but has shares and receives franking credits, and those franking credits are able to be claimed as a refund as tax already paid by the company. At the moment, you can claim them back from the tax office. Yep. So you get a tax refund equal to the franking credits if you've got no other taxable income. What Labor have said is, as long as you're not on a pension,
that's a government pension, like a Centrelink.
Yeah, the age pension pretty much. If you're not on a pension, then you will not be eligible to claim a refund for the tax credits. Right? You can still use those franking credits to offset other taxable income, but that means you're a taxpayer and you have other income to offset.
Yep.
But you won't be able to claim a refund.
Yeah, and the point I guess I was going to make here was, and that's at an individual level. So as an individual, so the wording of the policy as it stands currently, who knows whether they'll actually change this or not, but the wording as it stands right at the moment is that that's assessed at the individual taxpayer's level.
So let's look at an example. So you've got someone who has saved a lot of money throughout their working life. They've got a share portfolio in retirement. They have no other taxable income other than the dividends that they get from the share portfolio, and they get franking credits because they're a lot of the shares in Australia. At the moment, they would put in their tax return and say, I've earned X amount of income and I'm entitled to a certain number of franking credits, and because my taxable income isn't enough to pay any tax, I would get a refund of those franking credits back.
Mm-hmm. Yeah, it's an interesting policy, and just that it's so targeted because
yes,
you've got the bottom end, which the lower socioeconomic end. I guess if you're receiving age pension, you would, in terms of on the spectrum, you'd fall into that. You're okay.
So if you've got assets of a couple at 567,
I think,
something like I can't remember off the top of my head.
It's like 285 for a single person.
Yep.
That's
yep.
That's you'll get $1 of part pension, and that will exempt you from not having these refunded back to you. And then, really, at the top end,
if you're a person that's paying a lot of tax, then it's not going to affect you.
No, exactly.
It's only the people that aren't paying any tax.
Credits to offset the tax you're paying. It's that gap in the middle that sits somewhere between, $800,000 worth of assets and, maybe $1.2, $1.3 million worth of assets outside of the home, that's getting squeezed.
Well, yeah, it is, but I guess it depends a lot on where those assets are.
Well, true.
Right?
True.
Because if your assets are in a superannuation fund, then those franking credits are able to be used by the fund. So it depends on the makeup of that fund. Now,
unless you're in an SMSF.
Well, here's the thing. Here's the rub, right? Here's the kicker. This policy, I think, is specifically targeted at self-managed super funds. Because if you're a two-member fund, you're a couple, you've got your own self-managed fund, and you have $800,000 in your super fund, and no other investment other than maybe your home, but that doesn't count. Centrelink say you've got too many assets to get a pension, so you don't get the age pension.
Yep.
Right. Your super fund is, if you're both in pension mode, if you're retired, pays no tax.
Mm-hmm.
So normally you would be entitled to the refund of those franking credits, but under this policy you won't be. So if that's the self-managed fund that will get stung, what might happen, what I think is going to happen, and the way I've read it, is that if you're a super fund and you have other taxable income, you might have some pension members and some accumulation members where the accumulation members are either contributing and paying contributions tax, or the earnings that on their accounts are paying tax on the earnings, you can use the franking credits that are associated with the pension members account and use them to offset the tax on the accumulation members account. So you're basically swapping a tax credit for the tax money, right?
Yeah, because and this comes back to my point before where I was saying that the tax is levied at the individual level for that.
Well, at the entity level.
The entity level for that test. So your industry funds, your retail funds are all basically going to be able to tax swap, as Alex has just explained there. And most members in pension mode will be able to keep their franking credits if you're in one of those two entities.
Thanks for listening to this episode of the Masters of Finance podcast. If you want to hear it again or hear any of our other episodes, you can find us on iTunes, Stitcher or Spotify, or you can also head over to our website at www.moranfp.com.au to find all the episodes and some other material that we have for you. If you want to get in touch with either Chris or I, you can find us on social media or get in contact with us through the website. We hope you enjoyed this episode and look out for the next one coming soon.